Hello everyone, welcome to my channel. André Cardoso here. As always, thank you for being here. I hope you had a nice weekend and let's get prepared for the week ahead, and let's start with the cable. Giving sequence to the charts, or at least some of the charts that I shared before last week with you, that you can check here on YouTube. I'm also broadcasting to my Discord server, so if you are somehow a subscriber, you can also join me there and you get live charts as this one. And that being said, so let's start with some charts, and I wish you all in advance a very profitable trading week. For those who are, of course, who are trading, and for those who are learning process, I hope you had some I hope you take some useful information from the channel. As always, I don't need to ask you, subscribe, press that bell, notifications, whatever, blah blah blah. So you already know. Thank you very much for that. It's important for us as providers, as content providers, to feel that let's say friendship of yours. So it's very interesting to see people in the channel. And that being said, I wish you all a very interesting journey trading the market. So let's jump into some of the charts. That's one of the reasons why we are here. The cable I shared before, last week I shared this bearish shark pattern at 122.40. So I shared the possibility for the formation of this pattern. So 122.40, we had a very fast and strong reaction after the formation of the pattern. I will not be surprised to see the pair being pushed to these previous structure highs again at some point. We have a trend line resistance, or in fact a trend line support covering these lows. So this is a potential trend line support covering for now these lows. Let's see how the cable will react from here. But of course, a violation of this fractal support, as always, may also tell us a different story. As some of you are already familiar with, we have a potential false breakout above the resistance. We have a resistance printed before at 122.48, just a few points above the completion point of that shark pattern right here, right there. We had the pullback. Actually, we have this very sharp pullback and then the formation of that fractal. Then we have a pullback and a new higher high. So that being said, that points to a potential false breakout above the resistance, and that forces me also to pay attention to the eventual breakout of this fractal support, which may trigger a deeper retracement for the cable, which means I will search for eventually for an extension of the last swing high, and I will search for the golden Fibonacci level, so which is projected right there. So if the price, and we need to wait for a clear violation of the fractal support, and that may help the formation of a bullish shark pattern at the golden Fibonacci level. Okay, so that's what I'm waiting for. For the upside, you wait for the golden Fibonacci level. For the downside, you wait for the 224% Fibonacci extension. Okay, so I don't think this is the best moment to try even short or the long side for the cable. So I don't feel comfortable at this point pushing a trade on any of both of those directions. So basically, I prefer to wait or for a deeper pullback for the cable, which may offer me a small opportunity for the long side, but I prefer to wait for, of course, as I said last week, I prefer to wait for the formation of this shark pattern at 123.94, 93. because it will put the price very close to this previous fractal resistance, which may offer me a much better risk-reward approach if I want to try the long, if I want to try the short for the cable. So let's pay attention to this. For now, only a clear violation of this support may trigger a retracement. So let's pay attention to 121.50. So this is the recent fractal support. But again, I favor the formation of this shark pattern above. Let's move forward to euro versus dollar. We don't have a specific pattern to trade here. I'm just waiting, very similar to the same potential false breakout above for the cable. We have the same happening for euro versus dollar. We need to wait for a clear violation of the fractal support printed at 107.80. A clear violation of these lows may force a retracement, or let's say a deeper pullback to the previous fractal resistance. We have also the previous structure resistance, which may also act as a support if reshut. So we don't know if that will happen or not. We just wait for patterns to form. The same pattern will be formed for the pair with the pullback to the golden Fibonacci and also the 224% Fibonacci extension level. Very much the same for the cable. If the price can't find support at the golden fib, so it may be pushed lower to the 224%. For now, we are paying attention to more upside continuation, because I believe there is room to trade higher with the pair. But even if the price needs to trade higher, that doesn't invalidate a deeper or at least a limited correction or a pullback for the pair, and then later the recovery of the previous highs. As I shared before on a daily, let me just delete this. On a daily, I shared this chart before, giving you a clear example of how price action usually behaves. Of course, this is a very clear example. You will not see these type of situations on everywhere, but this is the price action that actually happens on every single chart that you can see. Okay, so this is a very clear picture. Sometimes it's not so clear, but this is what we expect to see on a momentum. The price breaking the support, finding a new support, and then coming back to previous lows, form resistance, and a new fall. A violation of the support, new support, back to resistance, back to support again, forming resistance, a new fall. The process repeats over and over again in this example. New support, back to the previous lows, reinforce the previous support now as a resistance, new lows again, breakout, back to the lows, resistance, breakout, always the same. And the reason why it's important to pay attention to this previous structure, the previous structure printed before, it's important because every time we see euro dollar recovering from these pieces of data, it tends to move to the next one. So basically, as I said, and I will repeat today, we are now threatening the recovery of the 108, which may guide us to 111, 115, and probably 122. So it's a step-by-step process, and during that process we will see the price pulling back and moving up again. So that's one of the expectations that I have, to see euro dollar moving higher. As I said, that doesn't invalidate the possibility for pullbacks, and we are paying attention to that possibility and trying to plot those patterns on a lower time frame charts. And for that reason, I prefer to go into a 2 hours, 1 hour time frame at this point. So 224% Fibonacci extension. So some of you may be asking, what are those Fibonacci levels there? And this is one of the shark patterns that I projected before. One of them at 161 and then the 224% Fibonacci extension. As we can see, the price prints a new higher high, actually multiple higher highs, and a new fractal support above. And it's now, we can see this as kind of a double top formation. It's not a technical double top, but we can see a clear V shape between those tops, which guides me into two potential situations here. One of them, a false breakout, very similar to the pound. As I said, a false breakout below may guide us to the golden Fibonacci extension. So we wait for the confirmation of the false breakout with the violation of the support, which may trigger the momentum to the golden Fib. That being said, that if that happens, that will confirm also the double top. And the double top at some point needs to retest the neck. So I will not be surprised to see this shark pattern triggering the double top, okay, and then the price and enforcing a retest of the neck, okay. So that's one of the possibilities. So be prepared for that eventual situation. So in a lower time frame, I'm paying attention to this support. On higher time frames, I believe there's room for more upside momentum, so I will pay attention to potential patterns forming to the upside. Okay, Aussie. The same methodology or the same strategy will be applied here. We wait for a violation of the support. We have support at 69.50. 69.50. So a violation of this fractal may trigger a move to the downside. I will pay attention to this golden Fibonacci projected at 68.52, which may converge also with a visit to the 200 moving average approaching from below for Aussie. And those are charts very similar. So that's what it is. Let's check the Aussie versus the New Zealand. Let me increase my time frame for a bit here. And as we can see, this is one of the most this is one of the pairs that I most enjoy to trade the patterns, because the patterns tends to react with a very higher probability for Aussie on this pair in particular. And of course, as you can see, we can see this descending channel and the breakout of the channel. I posted that chart before. Once the price starts to approach and once the price pulls back again, I shared again that chart saying, okay, eventually back to the previous highs, back to the channel resistance. This may be a good place to try the long side opportunity for this. We took a long on this pair. We're still holding a position for this one. Let's hope for the best and let's try to maximize our profits. But I will not be surprised, because I will not be surprised with a pullback from this price zone, at least let's say to the 38% Fib, and for that to happen, we will see a breakout of this channel, of this ascending channel. But we have this shark pattern completed at the 224% Fibonacci extension. So we are now threatening that price again, 109.04. So this is the bearish shark pattern completion point. We expect at least a pullback. I do expect, or at least we can expect a retracement based on the default expectation the shark tends to offer. But while inside this channel, you must pay attention to potential moves to the upside. So I will not say that a breakout of this channel will force the price to pull back or to print a deeper pullback. I'm not saying that, because we never know where they will find support. But at least a retest of the previous support, and daily fractal will not be a surprise if the price breaks below this trend line support, holding this recent momentum for the pair. So pay attention to this eventual breakout of that channel, and it may happen to the upside. If you want to trade to the upside above the channel, wait for it, but it may also be a decent trade setup. A violation of this channel on both ways may offer you a nice run. Of course, based on what I see, a violation of this channel to the upside, probably if that happens, it will be with a very aggressive move, you know, a very like 1, 2, 3 candles, very aggressive and very bullish candles, putting the price above, or putting the price, or at least approaching the previous structure highs. Will not be a surprise. A 78.6 at 112.72 will not be a surprise later. But even though we need to wait for the price structure to form, you need to wait for more price developments in order to see what type of structure are we forming, and if it justifies a position to the long side. Let's say if we approach the golden Fibonacci, and if you see the price breaking the channel at some point in the future, that may offer an aggressive move to the upside. But even though this is pure speculation, people, I don't know, I don't need to know, and I fear those who think they know. So I don't know where the price goes, I don't need to know where it goes, I'm just speculating. But a move above the channel may also offer well, let's say a move, a continuation of a bullish move, and may offer a nice opportunity to get involved. But as I said, we need to wait for further developments. We don't know if the price will keep trading inside the channel. If that happens, of course, we will pay attention to that possibility of breakout to the upside of the channel. I'm just paying attention at this point. I'm paying attention to eventual breakout below the support, taking into consideration the formation of this bearish shark pattern, or minor or lower degree bearish shark pattern at 224, which may suggest the pullback. But again, pay attention to this channel because it's important. It's one of the pairs that tends to respect its own structure. So as soon as we see the violation of that structure, something will happen for the pair. Okay, it's one of the best pairs to trade harmonic patterns, but not only harmonic patterns. Now let's go to the Kiwi. We have a golden Fibonacci at 64.52. I will not be surprised to see the Kiwi forming that shark pattern at 64.52. But we also have the same pattern projected above at the 224% Fibonacci extension, and that raises the question, which one should I choose to trade? Which one will offer me the best risk reward opportunity? Which one will put me into a more much more comfortable situation to trade? Okay, previous structure highs, weekly fractal 65.13. We have a pattern projected below. If you want to trade this pattern, you need to put your stops above these highs. You don't want to put your stops much higher, because you know if the price needs to respect this pattern will not need too much to invalidate. So we will assume that a couple of points above the golden Fibonacci will start to invalidate the pattern. Since we have these highs, and if you put your stops right above, we admit that if you short the price, that pattern, and if the price starts to move to the previous resistance, that will invalidate the pattern. But if you put your stops right there, you will put your stops immediately below or a few points above the 224% Fibonacci extension. So what may happen is you short the market, the market pushes to the 224, forming the pattern above, and then you short the price, and then you see the price coming down after exiting your positions, after hit your stops. So you don't want to see that, and to prevent that to happen, I prefer in a situation like this, when you see kind of a cup, in a situation like this, I prefer to wait for the 224% Fibonacci extension that may offer me, let's say, a 50% Fibonacci retracement as reward. I can take that reward and measure my maximum risk for this trade. So always the same, I never enter the market to lose more than what I expect to win. So I can clone my risk or my reward, I can paste there, and this is my maximum reward based on a simple one-to-one risk reward strategy. Does it make sense? Not at all. Not at all. If I repeat this process over and over again, and if you trade like, let's say, the 50% win ratio, you are a break-even trade. If you trade lower than a 50% win ratio, you will lose money for sure. At the end of 400 trades, you are losing money in a strategy like this, okay? We always try to minimize our losses, and I always try to play the market at least with a 1-2 risk reward approach. 1 at risk, 2 as reward. If the market then later decides to maximize my profits, which happens quite a few times, so not always, but it happens with regularity. So if I short a pattern, the market will not target only that specific Fibonacci. The market may maximize your profits. The same will not happen when we talk about the risk. If the market decides to maximize my profits, I'm here to catch that move. But if the price decides to trade against me, I will exit my trade immediately and I move forward to the next one. Okay, so basically I don't enter the market to lose more than what I expect to win. Every time I enter the market, I assume the price may fail me. So I assume this is a losing trade. I never enter the market expecting, okay, this is a winning trade, 100% granted. That will not happen. I always assume the trade will fail. I always assume that I will lose that money. And at the end, if the market rewards me, I accept it, embrace it, be humble with yourself, with the market, and move forward. If the price fails you, don't start to blame the market, because it's not their fault. Okay, it's our fault because we did not enter the market at the moment we should. So that's not market issues. So that being said, taking those rules into consideration, I do prefer to wait for a situation where it puts me in a much comfortable situation, so in terms of risk reward, then trying to short the market at the golden fib and being forced to use extended stops and one-to-one risk reward situation to trade. So I'm not saying I will not push a trade with a one-to-one risk reward, because I do push some trades with a one-to-one risk reward approach. I tend to decrease my initial position size, which means if you trade with one lot, I will decrease the number of units. Okay, I will not trade one lot, I will trade half a lot or a quarter of a lot. I decrease the number of units to trade. So if I use a one-to-one risk reward, I prefer to decrease my position size in order to keep my risk in conformity with my strategy. You know, I never cross my specific percentage of risk of my equity. And that being said, I prefer to maximize I prefer not maximize, I'm sorry. I prefer to adjust my position size when I use a one-to-one risk-reward approach. It's not usual. It's not. I don't trade with a one-to-one risk-reward every time, but sometimes it makes sense to push stops a bit higher or a bit lower, you know, respecting those criteria, maximum of a one-to-one, and then adjust your position size accordingly. So that being said, I prefer to wait for the 224, 64, 53, which may offer me then later a retracement back to the 50%. So, and let's prepare between commas. Let's prepare that setup. So this is a setup for the Kiwi. We have a shark pattern projected at 64.53. We have a maximum of a risk. We have a maximum of a risk-reward approach with our stops at 67.33. I don't want to use a one-to-one risk-reward. I want to try with a one-to risk-reward approach. I can put a 50% Fibonacci there, just as an example. How to do it? 50% of this one-to-one. This creates a one-to risk-reward approach. So this is my stops for the Kiwi. This is my potential entry price zone for the Kiwi, and that's my potential reward for the pattern. So one, and eventually a second one, a 78.6, which may help me to maximize my profits. So, and this is just an example on how I'd like to prepare some of the setups that you see on YouTube or on YouTube or Twitter. Every time you see one of those patterns, if I want to trade that pattern, that's the strategy that I will apply. I measure my reward. I use that potential reward as my maximum risk. I minimize my risk, and I try to maximize my profits later if the price decides to move on my direction. Always keep your stops well positioned, respect your stops. As soon the price moves against you, exit the trade as soon as possible, for one simple reason: if the price keeps trading higher, you cannot rely on a retracement back to the Fibonacci levels as a default expectation. We know the pattern tends to pull back to the 50% fib. This is a default target zone because we have studied this pattern before, and we know every time the pattern completes, there's a very strong probability for the price to pull back, and if the price starts to pull back, it tends to search for the 50% Fibonacci retracement level, but that's not granted. And for that reason, we also know if the pattern fails, we cannot rely on an eventual pullback later from higher prices to these Fibonacci levels. Okay? Don't rely on the pattern if the pattern is no longer there. So we cannot trade the Fibonacci, we cannot rely on those fib levels. Okay? That being said, this is just one example. Dollar versus, I'm not sure what's happening today with my charts, but sometimes it trembles, but okay. 4 hours time frame chart. We have no clear patterns for the pair at this point. I want to share with you this descending channel. So we're still trading inside this channel, but I want to share with you this potential, let's say this at least for now it's starting to bounce from this low, so I'm starting to eventually to ignore this possibility, because I was plotting the possibility for the bullish bat pattern at 91.89. So basically we have this previous swing high, you have a new low right there, and then new high. I was expecting at least 88.6, 91.89. So it is still possible to complete this sequence. The objective of this pattern is to print a new higher low. If the price prints a new lower low, that's a sign of more continuation to the downside, which may complete other patterns below, but we will pay attention to that. But for now, I was expecting the recent price behavior may force me to adapt and to change my analysis here. But based on the shape that we have, it's still possible, and because we are being rejected by this 200 moving average approaching from above, which may also act as an element of resistance. So it's if that 200 moving average keeps putting some pressure there, I will not ignore the possibility for the formation of this bullish bat pattern for now, because as some of you already know, that pattern can also extend to the 113 and 161.8 extension projected below. But for now, let's pay attention to this eventual bat pattern. But most important than that, at least in my opinion, and taking into consideration the time that we spend inside this channel, I would like to call your attention to not only to the channel resistance and support levels, but also to the regression trend line, which approaches from below, from the most recent lows. So this, as you can see, this midline, the midline of the channel, it has been acting as a pivot for the channel itself. So basically pay attention to this. So nothing very in particular for dollar CHF. Of course, if you start to see euro versus dollar starting to pull back from the current price zone, we may see dollar versus the CHF starting to price higher. But if euro versus dollar keeps trading higher, of course, we may see the CHF inverted with euro dollar, of course, trading lower. So pay attention to this bullish pattern projected at 91.89. As we can see, that will imply, let's say, the price to penetrate again this midpoint or this mid level, or this regression trend line of the channel. So let's pay attention to that possibility. Let's move forward to dollar versus the Canadian. Another big channel for the Canadian. Of course, this is a channel that needs to be which needs to be reinforced at the lows, at the bottom. So this is what we have now. It's pure speculation. This major or higher degree descending channel. You can increase your time frames if you wish, and try to plot this. But we are far from validating that channel. Of course, it makes no sense to do that, but that's what we have for now. And one of the reasons why I draw this channel, or this potential or eventual channel, is because the same way that I showed you before, the CHF reacting to this regression trend midpoint of the channel, we also have the Canadian threatening that same level. So I will not be surprised to see the Canadian trying to print kind of a false breakout below, but we still need to wait for a violation of the highs. Okay, we have this previous daily fractal 134.59, so a clear violation of these highs will confirm the false breakout below, and that will guide me, as always, into a search for the treasure, let's say at the golden Fibonacci extension level, as always. So that's one of my 2 cents for the Canadian dollar. We are now at the regression channel, at the regression trend line of this descending channel, so I will not be surprised to see this false breakout being confirmed with a violation of the daily fractal, which may increase, of course, the probability to search for this Fibonacci extension level. What to say more? For the Canadian, there's also, let me try to, no, there's not. I was looking into these previous highs between those two fractals, but we have a new lower low below this low, so which invalidates the sequence that I was thinking. I think there's nothing more to say for the Canadian, so wait for the breakout of the daily fractal. Of course, no need to say that the violation of the recent lows may trigger more momentum to the downside. Let's wait and see. Nice channel, nice potential channel for the Canadian, and eventual false breakout below. Longs eventually positioned above 135.60, and eventually shorts at 35.44, a bearish shark pattern completion point. Always the same, false breakout, golden Fibonacci. If preceded by a very strong momentum, we are talking about a potential shark pattern. Okay, you have this impulsive swing to the downside, a correction, new lower low, false breakout confirmed, golden Fibonacci extension. We wait for the retracement or the pullback if the price completes that pattern there. Okay, so that means that I'm not searching for opportunities to go long, even if that's one of the things that will happen. As soon the price starts to break above the resistance, many people will start to search for long positions for the Canadian. But even though I will pay attention to this pressure zone right there at the golden Fibonacci, as I said, because that completes the shark pattern, which may produce or may offer another pullback for the Canadian. But we will be here during the week, and we will be talking about that one as soon as the price approaches this price zone. The Norwegian krone, I shared this chart before last week also, pointing to this potential support level. So for this fractal support and the potential breakout of the support. So we have a daily fractal at 82.06, a clear violation. And when I say a clear violation, it's a clear violation of the low. So not something like we see here. This is not a clear violation. This is a threat. This is the price threatening to violate the lows. Many people probably started to short once they saw the price breaking below. So we need to see a clear evidence that that piece of data was broken. And for that to happen, I need to see the price closing and settle below this fractal, which is not the case. But we have, as I shared before, this pattern with you, 127% Fibonacci extension. This is the golden, this is the, I'm sorry, not the golden, this is the bullish butterfly pattern completion point, 9.58. I'm waiting to see that pattern completed at 127% Fibonacci level. This pattern does not require a lot of risk to trade. Usually I use the 141.51, the 141 extension as my limits. If I want to go long with this butterfly pattern, I will try to pick this price, and I will put my stops just a few points below the 141, because I know if the price keeps trading lower, there's also the probability to complete the crab pattern below. And this is where the same question arises again. Which one of these patterns should I trade? Which will offer me a much better risk-reward approach, and which one of them will put me into a much comfortable situation to deal with. And of course, my opinion, it's always the one more extended, and if you have one pattern extended, projected, or let's say which may converge with a retest of a specific trend line resistance or support level, well, that will increase the probability for the pattern to work for you, and that will offer for sure a much better risk reward approach. So that being said, we have a butterfly pattern at 958, but we have also the shark or the crab pattern, in fact not the shark but the crab pattern extended to the golden fib, projected at 939.49. So if you ask me, I do prefer to trade the crab pattern for a specific reason, because they offer me a much I have more room to work with my risk. Okay, I have a much better reward than trading from the 224% Fibonacci, or the 127% Fibonacci extension, because that pattern will not offer me. Let me plot that. Let's confirm that. If I go long with the butterfly, I will target the 38% fib. That offers me kind of 2.8% as a reward. If I want to go long with the crab pattern, that will offer me, I will target the 38% Fibonacci also, but that will offer me a 3.6% or 3.7% as potential reward. So for this one, 2.5% reward, I need to use a 1.4 stops. Okay, I need to put my stops right there above the bottom of the channel, above the completion point of the crab, if I want to use a 1-to risk reward approach. Or if I want to use the 1-to-1 risk reward, I need to put my stops at 2.85. So the 2.85 right there, this is a 1-to-1 risk reward approach for the butterfly pattern. Now for the shark or for the crab pattern, that's my entry point. I have my reward. My maximum risk to use is at 3.7%. So it's a 3.7%. So this is my maximum 1-to-1 risk reward approach. If I want to minimize that, I can try to play 1.5, 1.7, 1.8%, let's say 1.75, 1.2 risk reward ratio. Okay, I can try to play something like this. Question is always the same: which one will offer me a best and more comfortable situation to trade, or the better risk reward approach? I always say, pick your tools, measure both, and make your decisions. And there is no doubt here. The option that I prefer is the crab pattern at the golden Fibonacci, which will offer me much higher profits if the price trades in my direction. 3.7% against 2.8. I will put my stops at 1.9 against the 2.8 that I was forced to use as a 1-to-1 risk reward if I want to protect my position from the channel or below the channel support. And even though nothing assures me the price will complete the pattern, be pushed to the channel support and then bounce, and I will not have a range to manage my position with the butterfly. So that being said, make this information useful for you, I hope. Crab pattern 139.49, my entry point, my stops, and my targets projected above. If you repeat this process for the next 400 crab patterns you find inside the market, you will succeed, and I can say that with 100% sure. if you repeat this process for the next 400 trades, if you buy the crab pattern using these variables and criteria and these rules, you will succeed no matter what happens next. In the next trade. If you see this in a long-term journey, you will succeed using a strategy like this. Of course, if you, as I said before, if you use a one-to-one risk reward, unless if you have a very, very, very profitable win ratio, you will become a break-even trader or even a losing trader. If you repeat this process for the next 400 trades, a one-to-one risk reward, if you lose more than what you win, probably, not probably, it's granted, you'll burn your accounts. Dollar versus the Mexican peso. This is one of the, I pushed a trade above this previous structure support. We have this weekly fractal support. We have a butterfly, a bullish bat pattern which was formed below. And we saw the price invalidating that pattern immediately, almost immediately. As soon as I enter the price, the market settles for a small period of time and then starts to pull back again, or starts to fall again, invalidating the pattern. One of the patterns that I'm waiting to see now for the Mexican peso, very similar with the Norwegian krone. Let me delete this. One of the things that I'm waiting to see, as I was saying, we had, I think, I had this above the chart. Let me repeat this process. So as I was saying, last week or 2 weeks ago, I saw the formation of this bullish butterfly pattern. As soon as we enter, we saw the price settling just for a small period of time and then starts to pull back, to fall again. I'm waiting to see an eventual crab pattern projected at 1950. So that pattern may converge with a retest or an approach to this channel support level. So that being said, I will pay attention to this. Well, my next price level to pay attention for the Mexican peso is this. It is priced on 1950 or 1815, in fact. So I will search for opportunities for the upside if that happens. If the price completes this sequence, I will try to create a scenario to go with it. Mexican peso, nothing very specific, very similar to the Norwegian. Nice descending channel with patterns projected at the bottom of the channel, which makes more sense to try to apply a more, let's say, a friendly risk reward approach to trade it. The same may happen for the dollar versus the yen. The dollar versus yen, this is a daily time frame, a 12 hours time frame chart. We also have a bullish scrap pattern right there at the golden Fibonacci level. So basically we have this extension at 126.25 and that completes the bullish scrap pattern. I projected this pattern weeks ago already. Actually, as soon as I saw the violation of these lows, this fractal support, I started to project the eventual crab pattern at the golden fib. So I'm paying attention to this one. The same strategy will be applied here. We will target the 38% Fibonacci retracement level. By default, that's my default target zone. So we will target the 38% fib, and based on that reward, I can measure my my maximum risk, and I can apply my risk strategy to trade this one if the price forms this bullish crab pattern. Aussie versus the yen. One of the reasons why I'm sharing this chart with you It's because, and I think I shared this one also last week. I'm not sure about that, but you can confirm that. But even though it's important to pay attention to this price zone, because we are facing what we may call a potential double bottom and the 2618 trade setup. So this golden Fibonacci level at 88.86, that is the completion point of the bullish 2618. So we have a clear double top right there, double bottom right there. We have a broken neck position at 9106, so we have a new fractal at 9182, and the price starts to pull back to the golden Fibonacci level. So I do expect to see kind of a symmetrical ABCD pattern projected above. As you can see, that projection puts the price at the 200% Fibonacci extension, which is the default target for the double bottom. Okay, if you need to measure your targets for the double bottom, you search for the 224, the 200% Fibonacci extension, and as we can see, there's convergence between the bullish 2618 default expectations, which is a default ABCD pattern formation above. So we expect after we see the formation of the bullish 2618, we expect the formation of an ABCD pattern above. And that pattern, of course, that pattern may offer another retracement after completing. But for now, we are paying attention to this bounce from the golden Fibonacci level, which completes, as I said, which completes a sequence 2618, and I think there's a nice possibility for a new bounce and the formation of that pattern at 29. So that's the main reason why I'm calling this chart, because all the yen pairs are being pushed down. So don't be surprised to see a violation of this support. So of course that a violation of the support will invalidate the double bottom, which will invalidate, of course, as a sequence, it will invalidate also the 2618, which depends on the double bottom. Okay, of course, the double bottom invalidated, that pattern will invalidate also. More, let's go to some of the commodities and some of the crypto, the indexes and the crypto market. So let's keep going with gold. And for gold, I have actually we have a bearish. I projected this chart before weeks ago. Once I saw the violation of this next zone, I started to project that shark pattern or that crab pattern at 1927. I shared this chart today on Twitter, calling people attention to the 1927, which is the bearish crab pattern completion point, the golden Fibonacci extension of this last swing low. So this completes the bearish pattern. I do expect, actually we can expect, I don't expect by myself, you know, I do expect based on a specific price behavior attention, because that pattern suggests a deeper pullback on gold back to 1809. Okay, nothing is granted. I'm not sure the outcome of the patterns, we never know it, but this is one of the patterns that may offer very well, let's say it may offer interesting risk reward approach, and instead of searching for more longs after this long period of bullish momentum at this point, and because we are also facing the previous structural lows, previous structure support level, I will not be surprised to see that pattern working for us. So I'm preparing that short for the community. WIT, so this is 12 hours time frame. I need to go into a lower one. Let's go into a 4 hours time frame for crude. And well, it has been reacting very well for those harmonic patterns, as some of you are already aware and familiar with. Actually, let me go into a 2 hours time frame and let me pay attention to some of these levels. So I'm waiting for, let's say, I will not be surprised to see this bearish bat pattern on crude oil being completed at 80.51, so just a few points above the recent highs, and eventually the market will not complete the pattern and it starts to pull back from here. But based on this potential ascending channel, so this may act as a flag channel or a flag pattern, you know. You have the price trading lower, moving sideways, and at some point, if the price starts to break below those fractals, it will keep trading even lower. So this may act as a bearish flag pattern for crude oil. Only time will say. We need to wait for a clear violation of these lows, or a violation of the highs of this, let's say, of this channel or this parallel structure, which may imply more upside momentum. At this point, and based on the Fibonacci ratios that we have the 88.6 at 80.51, so this is the bearish bat pattern. But again, if you ask me which one I prefer to trade between the bearish bat pattern and the alt bat pattern, and based on the recent price action and behavior, I prefer to wait for the alt bat pattern at 82.72. The same strategy here. That one at the 113% Fibonacci extension will offer me a much better reward and a much friendly risk reward strategy to trade. Okay, we have a pattern projected at 82.72, and that pattern, after completed, will suggest the pullback to the 38% Fib, which is projected at 78.80, so back to the recent price zone. So you already know, if crude oil retests the highs of this channel, and if it starts to pull back, it should retrace back to the midpoint of that channel, if you want to see things like this. Okay, you have the highs of the channel, the lows of the channel, the support trend line, the resistance trend line. A retest or the reinforcement of this resistance trend line may force a retracement back to the midpoint of this channel. Of course, as I said before, this may work as a major or higher degree bearish flag pattern, and we will pay attention to eventual moves below the channel, but for now we are paying attention to these highs. Now let's move to copper. I know that some of you are familiar with this cup and handle pattern formation. I shared this one before on Twitter. Of course, there is no trade here. There is nothing to say on copper for now. We have default targets projected at 4.28. Nothing assures me the price will pinch just a couple of more points above the highs to achieve those levels, but there was a nice swing to the upside above the next zone or above this resistance, so we're still waiting for that pattern to complete, or at least to achieve their own default targets. But again, you can see crude oil already started to feel some pressure already. We have a new fractal at 79, no, at 80.24. So if the price keeps actually, if the price starts falling from this price on without completing the pattern, probably copper will do the same without completing that, without achieving those targets or those default target levels. We have also, let me put this channel, let me draw the channel again. So we have this channel, the Shining channel. We saw the violation above the channel, a breakout above the channel. I will not be surprised to see if if copper starts to pull back. I have two different trend lines to pay attention to. One of them, the previous resistance, the channel resistance, which may offer support, and also this potential ascending trend line resistance. So this may help the formation or the development of another price structure. Okay, so another price channel different from the one that we are currently abandoned. But pay attention to this one. So I believe that if crude starts to fall, the metals starting to fall, and together with copper, of course, that may offer a retest of the previous structure resistance level, which may converge with the channel resistance also. And then if the price can't find support there, we may see the reinforcement of an ascending momentum or of an ascending trend line support for copper. There's no clear patterns emerging at this point unless we start to see the price approaching the previous structure highs, which we are far away from those levels. So there's no reason to start to project patterns there, because we don't trade to the upside based on the pattern that is projected above, which is meant to be shorted. Just because I see a lot of things like this on the internet, on the web. I see some people, there's a bearish pattern projected at 88.6. I will buy the market until there. And that makes no clear sense at all. So if you are projecting a pattern that's with the main objective, which the main objective is to sell it, but you are buying the market, buying this pair just because you projected a pattern there. If I project a pattern, if I project a crap pattern above, you'll put your targets above, because I can also project you a symmetrical pattern to the downside. You will short the price there just because I projected a symmetrical pattern at 2.27, which is possible. No, we have the previous swing low, we have a bearish flag pattern and a new fall after that. 1, 2, 3 wave structure, a symmetrical projection. Will I short a market based on that? No. I don't know if the price will complete or form that sequence. I don't know if the price will complete the symmetrical projection. I don't know if I can project a pattern based on the price action that we see below, but I don't buy the market just because I expect the price to form a bearish pattern above. At least I want to wait for the pattern to complete and I want to short it after the formation of the pattern, but at least that's what I'm expecting you to do. So if I project a pattern at 88.6, I'm not expecting you to, okay, let's go and let's buy that expectation. I can try to buy this one, and this is good for an example. I can project the pattern above and try to search for a pattern that puts me in that direction. Okay, I have a pattern projected at 88.6, 4.81. There's a reason that find me a motive to enter the market in that direction. So we have the cup and handle formation. You go along with the pattern. We expect the price to trade higher at your prices to complete the bearish bat pattern. But find a motive to trade. The motive will help you to apply the strategy to trade it. So if you have a cup and handle formation, if you want to buy the breakout of the cup, you know where to put your stops because you have the handle already as potential support. You have the bottom of the handle. So you have two price zones where you can put your stops. You can put below your handle or below the cup. You can try to maximize your profits targeting the 200% Fibonacci extension. So I'm not going long because I have a bearish pattern projected there that I don't even know if the market will complete. So I'm going long with the bullish cup and handle formation, which may help me to put the price or to approach that bearish pattern completion point. And then later I want to short the market if the price completes the bearish pattern. Okay, find your motive to trade, create a strategy and trade it. Don't fall into false expectations. People with a big arrow telling, okay, there is a probability for the market to go there because I have a bearish pattern right there. This is not a setup to trade to the upside. This is a setup to trade to the downside. Don't fall on those false expectations because no one knows what will happen next. No one, not even the most brilliant trader in the world or investor, will know what will come in the next candle. 1 minute, 2 minutes, 5 minutes charts, 1 hour, 6 hours, whatever, 1 month charts. No one knows what comes next. So let's not try to rush trade the patterns and trade with a decent risk strategy behind. Let's move forward to SPX 500. I really don't know what's happening with my browser today and trading view. Every time I change instrument, it starts to tilt. Well, SPX 500 I shared last week again this chart, and I will call your attention again to this price zone. So we still threatening this golden Fibonacci, the 61.8% Fibonacci retracement level. We need to see a clear move above this Fibonacci level, and eventually a retest of the highs. Will not be a surprise, as I said before. I draw, of course, again, false expectations, pure speculation. I don't know if the price will form this cup. I'm just drawing it because it's one of the possibilities, and I want you to be prepared for that, which means a retest of the previous fractal resistance may provide you an opportunity to short the SPX 500 if the price starts to pull back to form this handle formation, so to form the handle for the cup. If that happens, of course, we will also pay attention to the potential breakout above the major resistance, and we will talk about that possibility once the price starts to approach those levels. But for now, this is pure speculation. Let's wait and see. For now, what we want to pay attention to is that this golden Fibonacci level. We have a new fractal at 4K. So that being said, if the market can't find a way to trade higher, it may, of course, there's only two options. One is to move sideways, move higher or move lower. So if the price can't move higher, it may spend more time inside this range between the 4K and 3941. So this is the most recent range for SPX 500. But I will not be surprised to see Actually, at this point, I will not be surprised to see anything, or a retest of the highs, or a fall and back to the channel support again. I will not be surprised to see any of those swings for XPX 500 from this price zone. I'm not paying attention to any specific pattern at this point because there's none emerging. I will pay attention, yes, as soon as we approach the previous structure in fractal resistance. Let's finish with the Nasdaq to cover later, and to finish with the cryptos. So the Nasdaq, I shared also this chart before with some of you, at least those who are those who paid more attention to. I called not the call in between commas, but I call your attention to the potential 2618 setup, which completes right there. In fact, I pushed a trade to my subscribers, which is still active, a few points below this golden fib. I think the market was trading already at 10,900, I believe, or 11,000, I think, something like that. I pushed this suggestion to go to the upside. We saw the price then printing this kind of a double bottom, and we have a confirmed broken neck right here. That being said, any pullback after the formation of this double bottom, if the price finds resistance and starts to pull back to the golden fib, we will have another bullish 2618 on a lower degree. So wait for the pullback, which may offer you an opportunity to go long again, because it's exactly the same that's happening on a higher degree. We have a technical double bottom on a weekly or a daily. You can see this technical double bottom on a daily. You saw the breakout of the neck, the resistance, and then the pullback again to the golden fib. And at this point, we expected the formation of an ABCD pattern above. Okay, what happens is that the market was pushed to the lows and printed a new double bottom, a lower degree double bottom. The same pattern may emerge. The price has found resistance above the broken neck. If the price starts to pull back to the golden fib, which may trade a few points lower, very similar to the one here, we will expect after that, we will expect a move to the upside. Okay, an A, B, C, D pattern projected above. Pure speculation, we don't know if the price will start to fall, but be prepared for that if that happens. A fall from the current price zone, or even if the price needs to print a new higher high, or a few of them, if the price starts to fall and finds support at the golden Fibonacci later, that will complete another bullish 2618 setup, which may offer you more opportunities to go to the upside on the Nasdaq, if that is your objective. Of course, its main objective is to try to trade higher with equities and indexes in general. So I will do expect more momentum for the Nasdaq. Now, and let's finish with Bitcoin. I shared this chart last evening, last Sunday, from yesterday. So I shared this one before among the communities I work with, and I shared this as a potential bearish bat pattern at 2800 for Bitcoin. Okay, so I do expect a move, a retracement based on this bearish bat pattern completion point, or based on the bearish bat pattern completed. So I do expect to see a pullback or a retracement, even if limited to this Fibonacci level. I will expect that to happen. Of course, if the price can't find resistance right here, we will see more momentum to the upside, and if that happens, I will then later point to, or will pay attention to, the potential formation of this crab pattern, which is now also projected at 25,200. So basically, if Bitcoin can't find resistance right now and starts to pull back, completing the sequence, I will expect to see more momentum to the upside and eventually the formation of this crab pattern above. For now, I'm expecting to see the pullback after the recent moves last week. I will expect to see the pullback. Actually, let me rephrase this because I have this. Let me rephrase this because I forgot to delete these things from my chart. So bearish bat pattern completed at 2800, and if the price fails to find resistance right there, it may be pushed to new higher highs. If that happens, I will pay attention to the crab pattern projected at 25,200, the golden Fibonacci of the last swing low. For now, as I was saying, I'm paying attention. I will expect a retracement based on this bearish bat pattern completed at 88.6. So this is the bearish bat pattern completion point. I will expect a pullback. If Bitcoin can't find support or can't find resistance right there, we may see more momentum to the upside, and I will pay attention to the formation of that crab pattern later. Okay, just rephrasing because I saw that I hidden the chart with these pictures. Let's go into Ethereum. Similar pattern right here. 88.6, 1609, bearish bat pattern completed. We can expect a retracement based on the default pattern expectation. So based on the default patterns targets, we can expect that retracement. The same will apply for Ethereum. If it can't find resistance at this point, we have a new fractal at 1620. If we see a clear violation of this fractal, the recent highs, we may see a move to the upside. We have also the monthly fractal at 2030. It's right. No, I'm not capable to see. I'm needing my glasses. 20.30, and we have 20. Come on, André. 2040. Okay. Golden Fibonacci extension. Previous structure highs in monthly fractal resistance. So that points to the to multiple patterns. In fact, for the Ethereum, we have this bearish crab pattern right there. Let me try to put some color here. We have this bearish crab pattern projected right there, which converges with this major shark pattern. Let me change this to green, perhaps. And we are now facing the bat pattern at 88.6. So basically we have the bat pattern, which may extend and be transformed into a crab pattern if extended to the golden fib. And we have also that convergence between the previous highs and the shark pattern projected in convergence with this eventual crab pattern right there. Okay, so for now we are paying attention to this one printed at 1602 or 1607. 1610, let's say, which may provide a retracement, or may, at least the pattern suggests a retracement to back to 1412, and that's what I'm expecting for both Bitcoin and for Ethereum, both with a bearish bat pattern completed. So both Ethereum and Bitcoins are at this point suggesting the retracement from the current price zone. Later we will pay attention to this 2040 level if reached. This completes my Monday introduction to the market, at least to some of these pairs that I'm paying attention for this week. It doesn't mean some others will call my attention and I will share those videos with you during the week. And that being said, I hope you enjoy it and I hope you take some useful information from here, and I hope you enjoy it. And I see you in the next time. See you tomorrow or after tomorrow. I will be here for sure to share some more content with you. See you there.